Wonderful. Well, good morning, everyone. My name is Eli Storch. It's a pleasure to have you with us today for our November 2021 DAG monthly meeting focusing on Shift Capital's latest project, J-Centrel. Before we get into any announcements, a few quick reminders. Please keep yourselves muted throughout. If you have any announcements and events you'd like to share early in the meeting, put them in the chat. I'll call on you and we'll give you an opportunity to share. So that chat function is open to you. Put anything, links, upcoming activities, events, whatever's going on in there that you'd like to share with the community, and we can give you a chance to talk about it. If you have any technical difficulties throughout, feel free to message me in the chat or David Brownlee, and we'll do our best to help you out on the technical side. Typically, our meetings have been off the record, but with the ability to use Zoom and share them with a broader audience, we've made the decision to record them. And I was just looking back, and I'll advance the slide here, back to September of 2020, which doesn't seem that long ago, yet seems quite long ago in many ways. That was our first recorded meeting with Shalimar Thomas, giving a wonderful presentation on inclusive recovery and Renaissance for North Broad. So go back through our website, take a look. There's a lot of recorded content there that you can see and peruse through the events page. Before we get into any announcements, I wanted to give a DAG announcement. So DAG has been, like many of you, I'm sure, following the legislation and the issues going on around streeteries in the city of Philadelphia, those varying levels of ramshackle and well-designed exterior outdoor restaurant spaces. So just wanted to read the following. There's a lot to like about the streeteries that have helped restaurants survive the pandemic and brought a new kind of liveliness to our city. But as City Council moves towards extending for another year the emergency provisions that have allowed restaurants to spill out onto the sidewalks and into the streets, making use of public property for private profit, we're missing an opportunity to make the most of the lessons that COVID has taught us. This should be the time for us to be talking about protecting the public interest in public space. We should be focused on ensuring that outdoor dining is available equitably to diners and restaurateurs throughout the city, protecting our ability to walk and roll our wheelchairs on sidewalks and drive through our streets, forbidding the unconditional giving away of spaces that we all own in common, and making sure that we are not condemned to live forever amid an ugly miscellany of wobbly tents, raw plywood huts, picnic tables, and teetering gas torches. We need much more. And while it may be too late to turn things around this year, before the question of streeteries comes up again in 2022, we need to be ready with a citizens' agenda for the most energizing yet safe and respectful use of our streets and sidewalks. In coming months, the Design Advocacy Group will be collecting and organizing public opinion in order to craft a shared vision and then lobbying hard for its implementation. So that is from the DAG Steering Committee. It'll be published on our website and hopefully other places soon. But to that end, we've assembled a working group that is meeting weekly, and we have the goal, and I want to thank Kat Kendon, who I see is on here, for helping to organize that, with the goal of putting together some recommendations and design guidelines to share publicly as this gets more consideration and more thought in the coming months and years. So if you want to get involved, please contact Lachelle Weathers, our wonderful DAG fellow, at dagfellow@gmail.com, and we can loop you in on the process and the plan and the progress, and make sure that you can have your voice heard as we're talking about it. So from there, I want to throw over to Marcia. Marcia, do you want to give us an update on our next monthly meeting?
Yeah, thanks, Eli, and hi, everyone. We're happy to announce that Randy Mason will be speaking at our December 9th meeting. Randy is a professor in the graduate program in historic preservation at Penn's Center for the Preservation of Civil Rights Sites. The center is working towards protecting places that celebrate, commemorate, and raise awareness of American civil rights and Black history. So please join us then, and back to you, Eli.
Thanks, Marcia. And I saw Randy is on here. So hi, Randy. We look forward to your presentation next month. So thank you for taking part and joining us.
Good.
Again, we have a little more business, but if you have anything to put in the chat, please fire away and I'll make sure to call you out. Let me get into one last bit of business rather before we start our presentation. It is my pleasure to announce, if you have not already seen the news earlier this week, that DAG's honorary chair for this year's Dig Deep for DAG fundraising campaign is none other than Denise Scott Brown. We're incredibly honored and incredibly delighted that Denise has been willing to lend her name and her support to DAG, and she has shared a brief message with us that you can find on our website, but I wanted to read it out here as well. Sorry for hearing so much of me talking today, but she shared this note with us, and I'd like to share it with all of you. She says, "For me, advocacy means offering one's skills for the public good, so I ardently support the Design Advocacy Group. In Philadelphia, we're lucky for DAG's focus on equity and excellence in architecture, preservation, and planning. DAG educates us about the preservation of African American history, public spaces reshaped in light of the moral and public health lessons learned during the pandemic, and the fulfillment of our shared vision of equitably conceived, publicly accessible, and sustainable waterfronts on the Delaware and Schuylkill rivers. And DAG informs us through monthly meetings, weekly DAG dispatch newsletters, and DAG forum essays, advocating for our large and diverse public on all aspects of the built environment. It's always a pleasure to see the work DAG highlights. I was particularly honored that DAG's first in-person event since the pandemic was a visit to Learning to See, my photographic exhibition at Temple's Tyler School of Art and Architecture. Please support DAG." So we appreciate Denise's support immensely. And as I've mentioned before, with a lot of our institutional partners being otherwise occupied, and we think rightly so on COVID relief, we are very reliant this year, more so than in past years, on individuals like yourselves to make donations. So if there is anything you're able to contribute, I'll give you a little look-see at our website there, and that support DAG tag right at the top allows you to give make your donation, all of which are tax deductible. So if you're able, please contribute, and it is very much appreciated. So with that, allow me to jump into today's program. I'm going to stop my share here. We will have a Q&A at the end of the program, so please, as you have questions throughout the presentation, put them in the chat. We'll make sure that they are asked and addressed at the end. So please join me today. We're welcoming Shift Capital to discuss J-Centrel, their latest project, which sets the standard for how developers can create spaces for residents and businesses to engage and participate in the community. With us today are Shift's Brian Murray and Margot Geppert. Brian is Shift's CEO and founder. He's focused on finding better solutions at the intersection of society's most difficult urban challenges, intergenerational poverty, urban revitalization, access to opportunity, and community displacement. Margot Geppert is Shift's Senior Development Manager. She worked on the development of J-Centrel from pre-development through the end of construction over the last 3 years. She also designed the Good Neighbor program logistics for both residents and community partners. So I'll ask you to give a virtual round of applause as we welcome Brian and Margot. Brian, take it away.
All right, I'm not muted, but I somehow turned on. Can you guys see the words at the bottom? Is that right? All right, hold on.
Yes.
All right, yes. We're gonna close that out. I guess that I did that in PowerPoint. Give me 2 seconds here.
No problem. It was adding a
I
different level of
accidentally hit that.
accessibility.
And let me try that again. Okay, I think I'm good there. Now I got to share it again. Give me a second. All right, are we good? Can you all see that?
Yep.
Yes, we're on your
Okay.
second screen though. So we're seeing the backup, not the main.
Let's see. I don't usually do this in PowerPoint, which is, I think, part of the problem here. So let me just do it this
That'll
way.
get you.
We'll just try it that. You can see that now?
Yep.
All right. All right. Well, thank you, everyone. I appreciate you having us. As Eli said, my name is Brian Murray. I'm the CEO of Shift. I'm joined here by our Senior Development Manager, Margot. Margot, you just want to say hello for a minute?
Hey, good morning, everyone. We're really excited to talk about J-Centrel today.
And so there's a few things. One, I'm not as familiar with DAG as probably I should be. So it was really nice to catch the introduction, to hear some of the things that you all are working on. Shalimar, I sit on the board of North Broad Renaissance as a good friend. I think the conversation about eateries in Philadelphia and equity is something that, as we talk through this presentation, is something that I think is actually pretty relevant to neighborhoods like Kensington, as opposed to just conversations in other parts of the city. The goal here, I think we are going to get to J-Centrel, but we thought it might make sense to give a little bit of background on Shifts, what we're doing. So I'm going to kind of go at a 10,000 foot view of what we're doing. My goal is to kind of dip into things that I think are hopefully interesting to this group as we work towards a conversation about what we're doing with J-Centrel. If we were in a room together, it would be a lot easier to interrupt me on a regular basis and jump in as I go. I will look out to chat, and I'm happy to have kind of the introduction, the interruptions as needed. Sorry, barking dog in the background as well. Okay, so let me just give you a little bit of background on Shift here. So we are headquartered in Philadelphia. We're a certified B Corp, and we're a vertically integrated real estate group. And for us, our kind of mission is to drive more equitable development in cities and neighborhoods that have been traditionally underserved by the real estate marketplace, in the traditional real estate marketplace. That, as we've grown over the years, has included neighborhoods like Kensington, which we'll talk about. And just to be clear, when we talk about Kensington, we're talking about north of Lehigh Avenue, where a lot of the larger challenges are right now. We have invested at Broad Area in Germantown. And then we are partnered with Mosaic Development Partners in Sharswood with Philadelphia Housing Authority. And we continue to focus on Philadelphia as a vertically integrated firm. We have started to partner with up and coming impact developers across the country, recognizing that in our own storyline, there was a tremendous gap and of trying to build a real estate business from scratch. Unlike the VC world that has a very healthy ecosystem, the real estate world is you're either a buyer or flipper, or you're institutional, and it's very hard in the in-between space for financing reasons, et cetera. And as we look to invest in Black and brown developers and other developers that are interested in impact, we're looking to try to find ways to improve firms' abilities to grow. So most recently, we closed on a project in Newark, New Jersey. We had a groundbreaking on a project in Washington, D.C. And then, I mentioned our partnership with Mosaic. And in fact, with J-Centrel, we've partnered with a group called Smith and Roller, who I'm sure some folks are familiar with in the room. One of the things that we feel like has differentiated us from the beginning is the focus on metrics and a focus on impact, obviously, most importantly. For us, when I started the firm and we got into this work, it was out of a frustration, or born out of a frustration of not really making impact on poverty. And the impact real estate world, 10 years ago when we were getting started, if you asked anybody what investors were doing or who was working in impact real estate, you probably would say affordable housing developers, or you would say CDFIs, reinvestment fund, et cetera. And my issue with that was that that both of those vehicles, while incredible vehicles of change over many, many decades, have been spreading dollars around and not concentrating dollars in the zip codes and areas where, we know from social determinants of health, where someone grows up is critical to their future success. Affordable housing groups are chasing developer fees, so their incentive structure is very different and not aligned with communities. And CDFIs, for the most part, there's exceptions, of course, but are spreading dollars around a larger community and a larger area, and usually are doing it through supporting small businesses and supporting real estate projects, but not necessarily as concentrated as we felt like we wanted to be. So we formed a fund that was our Shift Neighborhood Fund, focused on place. And one of the first things that we were struck with, so the idea of the fund is basically to invest at scale, to invest holistically, and to invest in front of what I'll loosely say is the rapid change of neighborhoods, so that there is a basis of real estate that allows a developer to really lean into the impact side of this story, and really try to build wealth within an existing community. But one of the things that was really critical to us was making sure that after 7, 8 years, 10 years of doing this, that we didn't look back and say we did more harm than good. So for example, when we were initially raising dollars, people said, well, aren't you just accelerating gentrification? And I'm going to use gentrification as a very loose term. I personally don't like to use it because I think it is taken on a meaning of its own. But for folks, it brings a certain connotation. If you're talking to, we're talking to the finance world, it's a good thing. If you're talking to communities, cities, and especially in today's age, it's a fairly negative thing. But how do we measure ourselves along that lines was critical to us. So we lined up with the United Nations Sustainability Development Goals. We created our own set of metrics, which include housing, economic development, community, health and safety, arts and culture, inclusion, diversity, and the goal here was just the realization that this deep work in real estate, in a neighborhood, on a block level, really affects so many different aspects of a neighborhood's of community members and the neighborhood, and we wanted to make sure to capture that. So that was part of our secret sauce and things that we do to this day. So I mentioned this. We're focused in Kensington, Harrogate. Nicetown, Tioga, and Sharswood. And you can, briefly see, I won't go deeply into this, but the economic demographics of these neighborhoods are, really at the lowest echelon of neighborhoods in Philadelphia. From a real estate perspective, though, and putting on kind of a real estate hat, there are also neighborhoods that have such an incredible opportunity in today's Philadelphia marketplace and yesterday's Philadelphia marketplace, to change that narrative. And that's part of what we're trying to do. I guess I will say that philosophically, we do believe that mixed income communities are the way to create healthy and vibrant and long-term communities. And that is the needle that we're trying to thread on a regular basis. And I'm sure we'll talk about it in more detail as we go. Briefly touch on this, I'll run through these. And by the way, philosophically, when it comes to these type of presentations, again, I hate to be up here for a long time talking, so I'm going to kind of run through this as quickly as I think is viable, and then try to get to these Q&As as quickly as possible. So Kensington, just where it is in the city, it's about, for us, this is kind of above Lehigh Avenue, along Kensington Avenue. I only bring this, show some of this to say, we are in a very challenged crisis in this neighborhood. This is recorded, so I will keep many of my deeper comments to myself, but there really is there is a need for significantly more leadership to tackle these challenges here. But what I will say that over the last 10 years, and I think this goes for any neighborhood that we work in, either locally or nationally, the first nod is not about the private developer talking about how we're doing all this stuff. It really is about the acknowledgement and the growth in Kensington in particular of such an incredible group of organizations and community members that have found their voices over the last many years. Some of them have been there longer: Impact Services CDC, New Kensington CDC, ASE, Yes We Can, Kensington Corridor Trust, and some incredible civic groups that, again, I think have been very voiceless for many years. But the one thing that I will say has been positive out of the opioid crisis is that a lot of this neighborhood has really started to find its power. And really, I think one of the examples of that was the SEPTA closing down the Somerset station, maybe about, I guess, 3-4 over the summer, and the amount of pushback to that was really incredible and good to see locally. So I'm going to move on from Kensington. So this is one of our neighborhoods. We've invested probably about $80 or $90 million. I think I'll just talk about what we've brought into it from a job perspective, but let me just kind of move through some of the projects that we have throughout our ecosystem. I would say our anchor in the Kensington area is our Macon Studios redevelopment projects, which were 2 former textile mills that were transformed into office, small business, maker, creative, artisan spaces that have brought over, I think, close to 700 jobs now in this neighborhood. Again, these were completely dark when we bought them, and it's just every day is an exciting day to see them be as vibrant as they are for the neighborhood. We have our work along Kensington Avenue, which I can speak honestly has been a real challenge, but we're starting to make some headway there. Our Bury project and residences at the Bury at Broad and Erie are really have been a 10-year odyssey. You know, public-private partnerships are something we can certainly dive into. And I do think is probably the only true way to get this type of work done. And then I have kind of the food hall that we're working on in Kensington. We have a charter school that we've in our ecosystem as well. The folks in the middle, Taib Smith, Adriana Abizada. Taib is a partner in J-Centrel. Adriana is part of the first neighborhood trust in the country, which with partners, Impact Services, PIDC, IFLab, which is where they're standing right now, is actually been a vehicle that actually allows the neighborhood and business owners in that neighborhood to own and control real estate in this neighborhood. Again, something we can go deep diver into later. This is just, you know, just to give you a flavor of the type of nonprofits and you know, artisans that we have here. There's you know, a lot of talk in the city about Bach in South Philly. Interestingly enough, we were opening up right when Bach got announced. I was nervous that there was not going to be enough demand in the city for both Bach with a much better location from some people's perspective in South Philly or our 250,000 square feet in North Kensington. And I will say that, you know, the small businesses of Philly are extremely strong right now, extremely strong. And you can see kind of the numbers of, you know, a lot of women-led businesses, a lot of Black and Latino-led businesses and organizations that we're providing affordable workspace for. You know, numbers here, you know, it's been about $100 million. It's actually increased probably about $120 million now. We raised traditional equity. Some of our equity was actually 4 Philadelphia nonprofits that invested their first impact investment out of their endowment came into this, which I think is of note. But I will also say that the first $25 million we raised did not come from Philadelphia. I think there are some stories to be learned there as well about sometimes how much, as Philadelphians, we don't realize how much we have in our backyard, how much, you know, value and strength, et cetera. But it was very difficult to raise locally initially until we raised from outside the city. We actually had a Korean-based impact fund that invested, and that was you know, that was fun to take back to Philadelphia investors and say, hey, look, how is a group in Korea investing in these neighborhoods? And you know, we haven't been able to do that locally. It's, you know, we have probably about 2 million square feet of space as well, and some residential here too. Mentioned this before, we've brought close to 900 jobs into these neighborhoods through just construction and construction jobs alone. Permanent jobs have been 650 plus. A lot of creative economy tenants, which are really driving a lot of the economy right now. You know, I always got frustrated with all the HQ2 conversations, and generally the push on, you know, the large corporate savior, when in reality, you know, if we look at this here, you know, these 80 tenants over the last several years have created something that the city would be drooling over as it relates to, you know, economic growth in our backyard. Just one thing I'll note, this is actually a little dated and a little changed, but, you know, the majority of our residential units have been at affordable rents. And, you know, we continue to try to make that happen. And J-Centrel is an example of that. So, Margot, I will drive and and you just tell me when to flip forward, but I'm going to hand off for you to talk about J-Centrel.
Thank you. We wanted to tee up that context that when we talked about J-Centrel, I think looking at it independently is interesting, but looking at it within the context of where it sits within Kensington geographically and within the ecosystem that Brian described. There are a lot of design decisions and components to the project that make a lot more sense with that background. So thank you, Brian. And Brian has been very kind to my background in my position at Shift. I come from an urban planning background. And when I came to Shift and J-Centrel was in its pre-development phase, I was strictly on the development team, kind of from the design and A&E side. And since then, I have touched on our commercial leasing and our social impact and working. So I've worked from, and also on the kind of the construction side. So I'm hoping to kind of give you the full look of J-Centrel from every perspective, not just design or development. You can go ahead to the next slide. We can kind of dive into the statistics. So J-Centrel is a 155,000 square feet building. It was a former textile mill and then furniture factory. And we'll show you kind of the pre-construction photographs, but was then home to the Philadelphia Furniture Bank, but largely underutilized and vacant for an incredibly long time before we had kind of understood and recognized the need for a different housing product within the Kensington and Harrogate ecosystem for the large part of the decade in which Shift had started acquiring and renovating real estate stock within Kensington and Harrogate. Our top priority was on the industrial stock and then a lot of the single family row homes within the area in which we had acquired 76 residential single family row homes. But for a lot of people who work within the neighborhood, were not necessarily ready or interested in a single family housing type. And Kensington and Harrogate is one of the communities in Philadelphia that has one of the highest reverse work-live statistics, so that almost 98% of people who live in Kensington leave for work, and people who work in Kensington do not live here. And so J-Centrel was an opportunity to provide a mixed use project that provided a different housing type and apartment type. And so, and also having ground floor retail to bring retail back to Kensington Avenue. So it's 4 stories, the ground floor is commercial, and then 3 stories of residential above the 116 units, most of which are loft style studios, and then 1, 2, and 3 bedrooms, in which 55% of those apartments are below 70% AMI, 33% are below 100% AMI, and only 7% are above that 100% AMI. Again, to create kind of that mixed income and bring in a lot of people who might be working in the neighborhood, but are not necessarily living in the neighborhood. And the job statistic at the bottom, just supporting the earlier social impact statistics that Brian had mentioned, that this job creating 200 construction jobs alone in the neighborhood. And we had worked through our construction through COVID. So the construction team was truly incredible in bringing this project over the finish line. You want to go next? And Brian, I'll kind of let you touch in if you'd like to on the C-based financing, but this project utilized historic tax credits, but was largely just financed through our own fundraising and capital stack. But Brian, if you kind of want to touch on, there's a pre-construction of J-Centrel and then what it is today, but C-PACE was a financing tool that was incredibly valuable and really filled a large gap.
Yeah, we were debating whether we leave this in here or take it out, but I do think this is an important new tool in the developer tool chest in Philadelphia and Pennsylvania. And for those not familiar with it, it is a a tool that that basically allows us to put additional debt on the project through the CPACE program, as long as we are applying that to certain environmental retrofitting, which you can imagine, old boiler. I'm sure you guys all have walked through buildings like this in Philadelphia. So pretty much anything we did was making it more energy efficient. But it really helped in a world where meaning in neighborhoods this far outside of the core, lenders are extremely hesitant, and there only are a few, I would say, lenders in the Philadelphia marketplace that understand lending in these marketplaces. But it's also, if I be frank, it's also driven by historical, a historical racist banking system as well, that has been problematic to relying on comp sets that are frankly out of line with what value should be in these neighborhoods. But the CPACE loan was the first one in Pennsylvania, and was a key tool for us to bring in some additional debt to be able to make this project happen.
Thank you. And outside of providing 116 units, which over doubled our existing real estate portfolio within Kensington and Harrogate, we brought on almost an additional 25,000 square feet of commercial real estate, which for a lot of the studios and retail spaces, many of them did not have the traditional street front access. A lot of them are within our Macon studios. And then to Brian's point earlier, our properties on Kensington Avenue being standalone, traditional retail storefronts, it was incredibly difficult to bring traditional retail and bring the businesses back to Kensington Avenue and have a storefront presence and feel on the neighborhood, like on Kensington Avenue specifically. And J-Centrel, the ground floor, when we were designing this, we wanted to provide a lot of the common amenities and safety and security that our Macon Studios was attracting, but anchored by our tenant Cafe Roasters and If Lab, to have true retail presence on the avenue and be open to the public when their businesses are open. And you'll kind of see in the earlier pictures that there's a gate at the courtyard entrance for resident security. I think our vision one day would be that the courtyard businesses are also opening that 9 to 5, and that the retail is open and inviting to the entire neighborhood. So we wanted to touch on that. Not only was J-Centrel incredibly important from the residential perspective to provide that type of offering, but also from the commercial side, we have seen businesses, Waxery come along as a DIY candle maker that she's from the neighborhood, and was interested in opening, but until she found J-Centrel, wasn't necessarily comfortable opening her store front all by herself. And same with several of our makers within that space. Everybody Eats as well, and Rebel Arts Movements, where Everybody Eats is a group of Black-owned chefs that came together on Juneteenth of 2020 and do food distribution all throughout the city, and heard about J-Centrel in the Philly Mag article, and read about the ecosystem and kind of plans that we had and the Good Neighbor program, which I'm about to dive into, and came to us, and now is another one of our anchor tenants that understands what we're trying to do with this project. So Brian, if you want to go next, dive into Good Neighbor. So the Good Neighbor program, if you were to just have the bones of providing the apartment types and providing the commercial space, that would have met two needs. But what we understood early on about this project is the initial kind of fear and reaction that comes with apartment complex renovations, even if it is historic renovations, but that comes with apartments coming into a neighborhood that's traditionally heavily single family row homes. And then we wanted a vehicle to create the framework and pathway for the residents to be validated for and understand how to work and connect with existing neighborhood organizations. So the Good Neighbor program offers up to $100 off of their rent every single month. And it is scaled to $25 per hour. So it's not an all or nothing. And we also kind of made the evolution that it's not just for J-Centrel residents who volunteer. It's also if residents work at these existing neighborhood organizations to like validate also those who already work within the neighborhood and then are also deciding to live within the neighborhood. And so we've been working on building up the pipeline of these neighborhood organizations for over 2 years, and really just grew out of existing relationships and getting their feedback about how to best run this program and how it would be meaningful to them. I think we were wanting to be really sensitive that if we were going to embark on the Good Neighbor program, that it wasn't just to try to check a box that we're making an effort for people to volunteer or contribute, but it was truly providing value to the neighborhood organizations. And we were also hyper cognizant of them being incredibly local. So not just if a group had heard about the Good Neighbor program was like, oh, I would love more volunteers. We sought out and we prioritize groups within the 19134 zip code and that were incredibly close to J-Centrel, so that people who were currently living in the neighborhood, when they see and go by J-Centrel, that we grow the chance that they know someone or invited to the building and that the building fits within the fabric of the neighborhood. And Brian, if you want to go next, kind of dive into the statistics. So the J-Centrel finished construction around summer, fall of this year, 2021. And we had staggered move-ins as construction was finishing, and we're currently offering 2 months free of rent upon move-in to help with lease up. And so we have had a little bit of a slow start to the Good Neighbor program. And again, with people also just coming back to in-person events. But so far, we have 14 neighborhood organizations that are signed with a partner agreement that they will accept volunteers. And then of the 51 residents right now, we have 12 of them signed on, and we just had our first month last month of people reporting hours. And we have about 5 hours that have been committed, and it's $125 back in people's pockets. And some of these photographs we've been able to do, it's current tenants being connected with our Macon Studios tenants. D at the bottom there was spending time at Philadelphia Diaper Bank. Up at the top, it's current residents on Palmetto working with groups who have spent time with and have their sport organizations at Scanlon, and then neighbors. Betty in the middle there has lived in the neighborhood her entire life. And so all these different groups being able to connect and identify opportunities to bring positive influence and projects. If you go back up, Brian, we have Harrogate Park residents were cleaning up last weekend. There's a local art teacher, a phenomenal community advocate that her and her students and our team painted at the entrance of Scanlon. Mural Arts has brought little libraries to the neighborhood that they're working on in our hallways. And so the Good Neighbor program, and combined with the design of J-Centrel, has really been a vehicle to provide the space for the type of projects that we want to support and that people want to see within the neighborhood. So if you go next, this is just a photograph from our opening day that includes partners from IFLab and Little Giant Creative, the Business Incubator, current residents, partners who invested in the project, residents surrounding J-Centrel from the blocks nearby, and all the partners who've worked on this project. And I think it's one thing to have a idea or a vision, but it's another thing to kind of see it validated in reality and in real time, and have it be a foundation for that idea to just grow and create even deeper impact and connections. And that's it. That's all I got.
So yeah, I did put a slide in here just about the Kensington Corridor Trust, which is something I mentioned before. But I think it makes sense. I'm actually not sure where the way I did this today. There are some stuff in the chat. You know, I'm happy to open it up for questions or to go into different directions or to jump around a little bit. You know, whatever makes the most sense. I'll turn it back to Eli.
Yeah, I certainly have my own questions, which I'll fire away, but please, folks, add some questions in that chat there, and I'll make sure they get addressed. So I guess I want to, let's talk a little bit to start with about housing and affordability. You have some residential, you're growing that residential side of your practice. Can you talk a little bit about the lease up experience at J-Centrel, how that residential side of your business is going, and what you've learned and that is going to lead you to your next projects?
Yeah, well, so let me divide this into two areas here, because I do think that they're related and important for the conversation about residential. So we initially, with kind of that neighborhood focus, holistic focus, felt very strongly that we needed to focus on single family rehabs in the neighborhood. And it was primarily driven from our own experience with both capital S slumlords and lowercase s slumlords, our own employees, housing situation, you know, early in our work, and a recognition that there was just really not any high quality rental in the neighborhood. And so in addition, we also, there was an article in the Inquirer, it had to be 2011, 12, I think, that, or actually maybe 13, 14, that was focused on the 3300 block of Argyle Street, which is around the corner, which was, you know, labeled the worst block in America by kind of crime statistics and all sorts of other things. And so we felt one way we could make an impact is we started buying on the 3300 block of Argyle with partners, actually. Impact Services, CDC, bought some houses, a couple other like-minded smaller developers also did, and then we bought a bunch as well. And the goal with that kind of was to, you know, raise the bar of quality. And there is a slumlord economy that at the time, you know, did not allow for banks weren't coming in to do single family rehabs. And so, and if they did, they were stuck with comp sets that said that housing was worth $40,000. So you'd never be able to borrow more than, you know, $10,000, $15,000, when in reality, these row homes needed $70,000, $80,000 to bring them into livable condition. And so that's what we did. We used our equity and we said, you know what, we're going to invest 70, 80,000, even though the market's saying it's worth 40,000, because, and as a result, we were able to keep our rental housing pricing at essentially the same market value. And again, I can talk numbers and cents a little bit deeper. what we've done with that portfolio is that we have been largely selling it off over the last couple of years. And there's two reasons for that. Well, three reasons. One, to some extent, we feel like our mission was kind of accomplished there, in the sense that investing in higher quality housing didn't necessarily what was important to the neighborhood. Two, operationally, it's very, very challenging to do single family row homes and do them well. I think we struggled with being an excellent landlord. I think we were a good landlord. I don't think we were great all the time, but we certainly tried, meaning, someone calls up and has a leak, that we go in and do it. And then the third reason was we started to realize that we could exit now and allow others to build wealth in this neighborhood that was not ours. And so what I mean by that is we offered everybody in our portfolio the opportunity to buy their own row home, and that we would, in the cases where people raised their hand, we were flexible on terms and closing and deposits. In some places we have deposit loans out there with some folks, and now even to this day, we managed to sell off some of our portfolio to a Latinx. They are called a affinity group. Excuse me. They're a group of Latin business owners in the neighborhood who wanted to start buying some housing in their own neighborhood, which we felt like was a great exit. We sold some of our vacant and more challenged stuff to Impact Services, who then brought it into the Jumpstart program. So we did our best to kind of offload some of that. All that's to say, for an $800, $850 row home, I mean, we had unlimited, a desire for that type of product in the neighborhood, because basically people were moving from literally across the street into these homes that we were renovating. J-Centrel, to Margot's point, it's still a little early, and I'll let Margot answer this. But from my perspective, I have been really, really happy with the dynamic of tenant that we've been attracting, because I think that there was a fear that it was going to be frankly, the classic gentrifying stereotype, whatever that was moving into this building. And in fact, it has been a really dynamic mix of folks from the neighborhood and working in the neighborhood. So Margot, do you want to comment on that a little bit more?
Yeah, I think.
And Margot is in J-Centrel right now. If
my background looks familiar, yes.
Her background is the thing, yeah. So.
Through construction and the difficulty of kind of getting this project physically done through COVID, we started leasing around April, and we're really intentional to send out the notice and opportunity that we were beginning leasing to our local partners, and then the larger market. But we have absolutely seen that people have been attracted to the size and quality of the apartments, most of which are about 700 square feet. And for very similar price point, you're not getting that much room within Philadelphia. And so many people that work nearby and have connections here were living in other neighborhoods in the city because of the quality of the apartment that they were getting. But then we're drawn to J-Centrel because they were getting that same quality and it was closer to their daily life. And so we, at first, I think, and we are now at 50%, which we were projecting kind of an 8-month lease up timeframe, but the demand sort of overwhelmed what we were expecting on the lease up side.
George, do you want to unmute and ask your question? You wrote a long one there, and I didn't want to read it for you. You can jump on and share.
It's on the chat if anybody wants to read it, what I said, but it's regard to the expiring Section 8 commitments. We're trying to compose a position paper that sort of focuses on the problem at 40th and Market, which is but one of many projects that are at the end of their 30 or 40-year required commitment. And in some cases, they're subject to, again, the vagaries of the real estate market where the land has gone up extraordinarily in value. And I understand in some cities, it's possible, or they have requirements that that a nonprofit developer has right of first refusal when the original owner developer wants to sell. But I understand that's not the case in Philadelphia. And so the questions are, would Shift Capital be interested in taking over such projects under certain conditions? Or in general, what advice would you have for others trying to take over such projects or stabilize them? In the specific case of 40th and Market, and probably some other sites as well, we think there is potential for increasing the density without forcing anyone out. So in other words, providing a modest development opportunity that is not the same as you would get if you demolished the entire site and evicted all the tenants. But we feel very strongly that these people have lived there for 35 years or more. And this is something that was an incentive. It was a financial incentive built into the program, I suppose. But now we're coming to the point where you must pay the piper, and the social dislocations are huge. So just any general comments or advice you might have on this problem would be very much appreciated.
Yeah, I mean, so 40th and Market, that's not the West Park Apartments, right? That's, is that the recent controversial one with Councilwoman Gautier, and or is that one that Altman is
Designed in the
Yes,
80s, I think, by Friday
Yeah.
Architects.
it's the Altman properties. Yeah.
it's the Altman properties, right? Yeah. Okay.
Beautiful townhouse project.
Yeah, I mean, so the short answer is Shift interested in those type of products? Yes. I think what we want to do is we want to make sure that we're running into the gray area, right? So right now there is a scarcity of good developers, or developers that are willing to go into the gray area. And what I mean by that is, what our work, the work that we do is very hard. And at the end of the day, there's always going to be people that are upset with us as Shift. But what I do know, and what kind of keeps me and our team going, is that we know that the neighborhood's better off for the work we're doing. We might not be perfect, right? But we know that we're in there trying to do better than the incumbent folks that have been investing in some of these neighborhoods over the years. I think that what you described in this situation is, one, very, very complicated and complex. And I have heard, and I will say that I've heard Bruce Altman talk about this, as well. And I do think that there's opportunities for win-wins. I do. And I don't want to stereotype any one of these circumstances, because I think that they're all very, very different, and you have to come in with a listening mindset to understand how that win-win happens, right? So it's not always that, we're trying to keep everyone in place. And again, I don't want to talk about one circumstance or the other. It may be a case where, yes, you do want to keep people in place, but there are also a lot of cases nationally where it's actually the residents that say, hey, we want a better place, right? And the only way to do that is some sort of movement of people to make that happen. So I don't think there's a one size fits all. I think that's what makes it very, very interesting. I think the West Park Apartments that PHA did an RFP for is also a really interesting example. I've heard rumor. I kind of know, I think, where they're leaning. But New York City with NYCHA, and has really done some creative stuff, and I think would be worth looking at as it relates to private-public partnerships that could work in this space. But I just want to make the statement that I think as a Philadelphia community, we tend to point fingers and make it very difficult for people to go into the gray area. No, and I think what happens, the result of that is that good developers are nervous to get into the middle of such a complicated situation because they feel like they're either going to be called gentrifiers, they're going to be called out, when they're really just trying to figure out a better pathway forward. The result for me is that, as a Philadelphia community, we end up, raising up communities that actually don't really exist. So this is hopefully not too controversial to say, but everyone loves the Navy Yard, right? And the Navy Yard is incredible for developers because there's no community voices, existing community voices that they have to worry about. Now everyone's excited about Bellwether. And we're going to talk about billions of dollars flooding into Bellwether District. And again, hey, developers are going to love places they can go where there are no people to complain, and they can create their own, and they'll bring in affordable housing, and a lot of good friends working on both of those. But it's much harder to go into your situation that you just described, to Kensington, to Broad and Erie, to Sharswood, and seek to navigate very, very complex voices. But if you had to tell me, I would much rather our political resources, our investment resources are actually going into places where people are right now. So anyway, that was a long-winded, and I got on a pedestal a little bit there, but that's, yes, I think a position paper and starting to really shed some light on where win-wins can happen is a great place for DAG to weigh in.
Would you be saying there that 40th and Market is not difficult enough as a neighborhood for Shift's interest? And
we want to be places where we can drive equitable value. It doesn't mean that we haven't yet to date gone into a neighborhood like 40th and Market and figured out how our sauce works there. We've been approached and we've had conversations and we've thought about it internally. What does that mean for us? Because we have been focused, obviously, in more economically challenged neighborhoods, but we want to be in that area that is complex, that does require listening, that is going to hopefully benefit incumbent locals as well, and think about wealth building and all of those components that come with it. So it is something we think about. Yeah.
So I have a question here from Jonathan Dean, asking about some other ways that you're looking at bringing ownership opportunities to community members, and is crowdfunding part of those conversations?
Yeah, so I am going to be controversial in crowdfunding in a minute, but I think I don't know when the question came in, but I think we did talk about briefly our own experience with trying to sell our row homes to our tenants. We're huge believers on home ownership as a wealth building tool. I often say, quick aside, there's a home on the 3300 block of Tioga Street that in 1973 was worth $35,000, and in 2013, when we were really kind of starting to invest, that same house was worth $35,000. And so when we talk about generally wealth building as a tool, I am a benefit of growing up in the Philadelphia suburbs, where my parents bought our house in the early 70s for $40,000. And when I got to college, it was worth $200,000, and that's how I went to college. And I do think that's critical. Normally though, we're relying on, we can't run in every direction. And so I would say that this is an area that, relying on the work that ASE is doing in home ownership, that New Kensington CDC is doing in home ownership, impact service, there are ways in which we would love to continue to support that, but haven't, other than offloading our own assets, haven't figured that out. Crowdfunding, we have done, we crowdfunded our project, Sharswood Ridge, with Mosaic and with PHA. And we've been looking at crowdfunding for many, many years. And I think it's a very, my controversial statement is I feel it's a little bit of a marketing gimmick. I don't really believe that someone investing, $300 is necessarily going to be building wealth for people. I will say where it's very valuable, and where I do think it's really needed or important, is that it actually starts to educate people in the neighborhood about what real estate wealth and real estate investing is, just by nature of doing it. But our experience to date has been that there's been a very little local, hyper local dollars that come into these projects through crowdfunding. I would say Philadelphia dollars a little bit more, and then usually the rest comes from outside Philadelphia. But yes, I do think it's not a silver bullet. I think people do talk about it like a silver bullet. I do think it's a great tool as part of the financing tool chest to have there.
So I've got a great question from Daniel Hammerman on the architectural technical side. Could you speak to adaptive reuse and the CPACE funding, energy code, various upgrades required while still maintaining aesthetic character of buildings? So your exposed brick and exposed timber, wood framing, steel framed windows, et cetera. So what were the trade-offs? What were the issues there? How did you achieve it without busting the budget? And then I'll add my own is, did you look at on-site renewables, with those industrial buildings? Did you look at any PV panels to support your energy model in the building?
Margie, you want to kick us off here?
Brian and I are laughing because we can't exactly say that it was without busting the budget. It was incredibly difficult, always with adaptive reuse of so many of the unknowns before you start construction. And working with historic tax credits and the historical commission, we had a lot more expertise and support on the consulting side as far as how to navigate and make these decisions. And the windows are historically, were custom designed to be historically representative of what was there before. The color that we chose has to be a historic color and matched the historic red on the building. We had kind of hoped to maybe go for something bolder, but the red turned out beautiful. But so many of the decisions, and including also just painting over the bridges and what we did with the courtyard, we really tried to toe the line of respecting and paying homage to historical design, while also making it feel accessible to the neighborhood and adding in more color and making it culturally representative of the current community. And you'll see that on like painting welcome on our bridge. And so it was a challenge. Brian, you kind of want to add into more?
Yeah, no, I think, I should have probably kicked off with this, and this is a design advocacy, the architect was JKRP. I think they were a great group to work with to navigate this. And obviously we feel that the natural, the two buildings side by side, the alleyway in between, all of this stuff is not it was inherently there. So trying to pull that out. Obviously we did put it on the register ourselves, actually. So part of our process was putting it on the register. to the environmental kind of energy, alternative energy, I will say that that we were not able to push that as much as we would have liked. And I don't know if that was because we were designing this a few years ago, and some of that has changed, but the reality is we are still stuck in the dynamics of, the pro forma in a neighborhood where there was no comps. So we didn't probably push that as much as we could. And I think that's a regret that unfortunately will be behind us. But I do think as we continue to move in the right direction as a group of folks across this, it's just something that will continue to weigh into stuff. But I would say that we didn't push that envelope as much as I wish we could have. And that was basically a financing decision at the end of the day.
So Margot, I wanted to ask a couple questions about the Good Neighbor program. So now that you're in it, you've seen some results. Do you feel like it's the kind of program that's going to be scalable and will be usable across either your entire set of properties? Have other developers approached you about how you set it up, and could it be scalable across thousands of units instead of hundreds of units?
I think so. We've actually had kind of an opportunity to talk to our friends at Seawall Development in Baltimore, who are still evaluating what project might be the right fit. But I think the complexity of scaling the Good Neighbor program outside of J-Centrel is that there is the need to take a asset-based community development, trauma-informed lens that typically is either from the nonprofit or urban planning or community development side, while combining that with traditional property management, and bringing those two wheelhouses together to, one, establish the Good Neighbor program at a different neighborhood, a different project, but then also making sure that the implementation is set up, that you're tying your pro forma and your accounting system and your marketing teams to make sure that they understand the logistics of how the Good Neighbor program needs to move through the resident experience. And so when we were looking at if we were to scale the Good Neighbor program, it's really about standardizing the asset-based approach of establishing those good neighbor relationships and partnerships. So we have 14 partners signed on, but we've talked to about 40 different community-based organizations about becoming official Good Neighbor program partners. And we understand that the reason that we really only have 14 is that there was a pretty significant fear of taking on an extra project that wouldn't necessarily directly benefit or be in line with what they have to do on the day-to-day. And so we were really intentional that the residents are driving that experience, and they're accountable for recording their hours, taking photographs of them, being at the events, reporting that directly to us, like really taking the ownership off of the program partners. And so I think that the framework of the Good Neighbor program is absolutely scalable. I've worked in different neighborhoods all across the country, and working with the Kensington organizations without kind of thinking about the Good Neighbor program through an asset-based lens. I think it would have been more tempting to keep a very small amount of partners, but I think part of the value of the Good Neighbor program was about the potential for it to scale and for it to be a benefit to multiple Good Neighbor partners. We didn't want to funnel all the 116 units into 2 or 3 different organizations. And I think that the flexibility and the breadth of and variety of different groups that can benefit from the Good Neighbor program also speaks to its ability to scale to different communities.
I'll just add, I'll add briefly, and Margot's talking about it from the perspective that she's been implementing it, which has been a huge heavy lift. And I'm right now, the mindset is let's get this right. So the goal of this building was to be the most civically engaged building in the country. So at the end of the day, every year, if we're delivering a few hundred hours of volunteer hours into the neighborhood, that's going to be a success. There are a lot of logistics to it that we're learning as we go. There's, the only way is either two ways it scales. One is that there are groups that really value and want that as a part of their strategy. And then, two, if you can make, and this is, I don't know if we're not necessarily going to try to make this argument, but you can make the argument that it actually makes your building more valuable. And this is a problem of the environmental space as well, is how do you drive data to show that it's actually doing this program, makes your building more attractive, retains your tenants longer, whatever those statistics are that are really important to a building owner, then yes, I could see it continuing. What we have right now, we're just sharing our secret sauce with whatever developer walks in the door. Is there a set of technology that we put into place that helps streamline this? None of those questions matter until we prove and show and demonstrate first. And so this coming year, 2022, is about doing that. And then I think we'll look at, what it does. I do think we will scale this across our other residential projects in Philadelphia, because we already kind of have gone through the brain damage. So I do think we will probably do that in other neighborhoods.
Thank you. Another business question. You mentioned you were a B Corp. What was the decision about becoming a B Corp versus a 501c3 nonprofit or other entity?
Yeah, so I think the initial question was whether we're just a for-profit or a nonprofit. And when I mean, at the time I had another partner, and we were evaluating how could we make the most impact. We very much could have been a nonprofit, but there were already nonprofits in this neighborhood, for example. We didn't feel that we could raise the capital as a nonprofit with no experience, versus being a for-profit where we could raise capital quicker and actually compete against the slumlord, economy in these neighborhoods. And we knew we had to go at scale. Our Kensington Corridor Trust, which has been an incredible labor of love among many folks, there's a huge excitement because they've raised about $3 million to date. And $3 million in real estate is not enough scale to make a dent on Kensington Avenue. And as I say to them, like, look, the goal is $100 million, right? Like, we've got to do this at a big enough scale that it actually makes a dent. When we were making our decision, I had come from the impact investing world. I'd come from that social enterprise world. So I could get comfortable saying we were for profit, but I knew we needed to take a step further, which was the B Corp certification, which is, really allowed us to say that we take this very seriously, that we are, that people come in and we have to report out on what we do, against peers, against others, and that, we may make mistakes and we may not, if I could wave a magic wand and do only community only projects then I would love to be doing that. But I think we're doing a mix, and ultimately being a B Corp, I think, sends the right signals to the market.
Wonderful. Well, I think that's probably a good place to wrap up for the day. I wanted to thank you both for joining us. It was a pleasure to hear what you're working on, and I may be hitting you up for a tour of J-Centrel at some point. It's a really exciting project. So again, I'll ask everyone to give their virtual round of applause to our speakers. It's
I
become a thing that we
appreciate it
do.
a lot. It was nice to tag team with Margot here, and at least not be the only talking person. Margot, thank you. And look, the cafe, the Vietnamese coffee group. If you're interested in just coming up and grabbing a cup of coffee, I am amazed by the success that they've had, especially in the Asian foodie community. But especially locally within the community, it's worth a drive up and checking that out. They were just written up in the Philadelphia Inquirer about 3 or 4 weeks ago. We're very proud of them, and then happy to do a tour anytime.
Thank you, and I'll make my last shameless plug. If you want to head to that DAG website and throw your support our way as we wrap up our fundraising at the end of the year, we would very much appreciate it. And then
So
December
my
9th.
last plug, Eli,
Okay, plug away.
is when we talk about eateries, right? When we're talking about outdoor public space that we're bringing back into the public space, let's just think about the situation on Kensington Avenue right now. Let's think about, you guys, all designers, right? Let's think about the background of the elevated train, Kensington Avenue, public space, closing of streets. And when we talk about closing of streets, let's not just talk about Rounds Rittenhouse. Let's talk about taking back and thinking about, how this applies in neighborhoods that they can't even, they're struggling every day, but God, would that could we take our biggest negative anchor in the city of Philadelphia and make it our most positive one? That's what I'd love, as you all think about this. That's my shameless plug. Sorry, Eli.
No, I'm right there with you. So thank you, and we'll see everybody December 9th for Randy Mason's presentation. Have a great day, everyone.
All right, take care.
Thank you.